The recovery is continuing. We see world trade and industrial production to continue to pick up, although it's still not yet at the pre-crisis levels where we were. Commodity prices have rebounded, which helps particularly many of the developing countries that export primary commodities. We've seen, despite all the financial turmoil of recent weeks and months in equity markets, that overall risk premia in most credit markets have dropped, and even dropped to at or even below pre-crisis levels, meaning that there's more confidence in financial markets. The stronger recovery comes from developing Asia, which is also helping other developing countries for higher commodity prices, though growth still remains below potential in Latin America, Africa, and West Asia. In the transition economies in Southeastern Europe and in the Commonwealth of Independent States, we see also a very fragile recovery from very steep declines, particularly in the CIS countries in 2009, 70% decline. On the back of stronger commodity prices and some recovery of domestic demand, that may lead to 4.2% growth in the CIS countries on average, but it will remain very fragile because it's so much dependent on what happens in the global economy and what happens with commodity prices worldwide. On the downside, we have these risks. The global jobs crisis is still looming and is slowing or moderating the recovery in Europe, in the United States, and also in Japan. And as long as these rates remain high, then also the recovery in consumption demand will remain lackluster.